So now that our business is operational, we now have some financial information to base our financial success off, and also show that we have a financial plan in place for our business. So by having a sound financial plan in place, our business will have a greater chance of success in the long term. The initial cash flows and financial statements have all been drawn up to be the most realistic that we can in order to analyze our success. And then we also analyze our key performance indicators outlined earlier in this report. So just to go over some of our debt financing for our business, we have 2 mortgages. We will require debt financing through a financial institution. We have a $2 million inheritance or starting cash to help with the initial down payment. And then our loans, as stated, are split into 2 different classes. So we have the loan for the yard sites, which are 20% down payment for 10 years at 5% interest with a monthly payment of $4,242. And then the land mortgage is 20% down payment for 25 years at 5% interest, so a little longer term mortgage on the land for a monthly payment of $28,700. And then we move into a line of credit. So we also require an average operating loan of about $330,000 to put seed in the ground, and this is paid at a 3% interest annually. This enables us to be cash positive throughout the production year, and especially through the non-income months before selling our grain inventory in November. But being cash positive is of utmost importance to us as a business, to have survival through those months, to be paying bills, and to have cash on hand in the event of any unknown occurrences. So, as stated, largely the line of credit is to pay for the seed, the fertilizer, chemical, and the fuel for the production of our crops, which was largely the reason for paying our loans off. And then we move on to the key performance indicators we outlined previously in our business plan. So for the return on investment, which is net profit divided by total investments, on year 1 we're sitting at 17.5%, year 2 we're sitting at 16.46%, and then year 3 we're at 15.8% return on investment. And then we move on to return on equity, which is net income divided by shareholders' equity. So year 1 we're sitting at 14.9%, year 2 is 12.29%, and then year 3 is 10.55%. Next we have our return on assets, which is net profit divided by total assets. And year 1 that gives us a 4.99% return on assets, year 2 is 4.72%, and then year 3 is putting us a 4.56%. Next we have our debt to equity ratio, which is total farm liabilities divided by total farm equity. So for year 1, it's 1.98. That means for every dollar we own about $1.98 per dollar that we have invested in our company. So we're owning about 33% of our company in our first year. Second year is 1.6, so for every dollar we own, we owe $1.6. So that's about 30% of the company now owned. And then year 3 is 1.31, so for every dollar we own, we owe $1.31. And that works out to about 43% of our company is now equity or actually purchased. Next we have our net income for our business. So in our first year of operation we make just shy of $370,000. In our second year we're just shy of $350,000. And then year 3 we're sitting at $330,000 relatively. And then just our break-evens of production based on those first 3 years. The total expenses needed for year 1 is just over $8 million. That's including our mortgages in the first year. Year 2 we have $1.3 million of expenses. And then year 3 we're at $1.3 million again. So for a complete set of financial statements, we do have the attached spreadsheet that you can analyze all of these. And then you can also see a description of our yearly cash flow to see where these expenses are coming into the business, and just a description of what they are and where they're going. Okay.
Hello. For the financial statements inside the crop inputs, and for the first year, we are splitting the crops into a 3 rotation. We have 1,920 acres available. 50 of these acres will be for yard sites and wells, leaving 1,870 acres farmable. Half will be canola, leaving 935 acres of canola expected to yield 46 bushels an acre, with a total input cost of $143,587. 1/4 will be wheat, leaving 467 acres of wheat expected to yield 65 bushels an acre, with an input cost of $50,404. The other 1/4 will be barley, leaving 467 acres of barley expected to yield 82 bushels an acre, with a total input cost of $47,138, leaving our net income on crops for $555,282.